Fellow traders, 'tis I, TheRumpledOne, coming to you on Friday, October the 3rd. The year's 2025. Let's talk trading. Weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. And I hope you have your risk management in place so you don't lose more than you're willing to lose on any one single trade or during a trading session. So we take a look at the weekly. All the gaps have filled, the weekly open gaps. We are 96 pips above the weekly open, 43 off the high, and 99 off of the low. If we take a look at the monthly, we can see we're 40 pips above the monthly open, 43 off the high, and 83 off the low. We drop down to the daily. Notice that we broke through the opening range for the week today to the upside. We are now in the opening range for the month. And we actually broke through the bottom of the opening range for the month by a few pips. Let's see, that was 32.9. We actually got down to 27.5. So maybe there was a possibility to make a few pips there. For the year, we're 973 above the yearly open, 306, 305 off the high now, and 1384 off the low. Looking at the inside bar, yesterday we dipped into the daily inside bar from 5 days ago, but yesterday that would have been 4 days ago. We are now within the weekly inside bar from 5 weeks ago. Today, funny day today. It should have been NFP, but because of the government shutdown, there was no NFP announcement. So we're only clocking in at 57 pips here of range on the pound. And once again, the Swiss yen's leading with 119 pips. The buy zone shows we had an opportunity to go long. In fact, I had a viewer sent a reply. They were asking about the buy zone. And in fact, what they were asking about was the euro yen. So let's just take a look here. Well, you can see here today, it just shot through it at the beginning of the session and never looked back. But they were asking about, where do you set it? And, usually I just keep it at the +8, +10 levels. And then somebody was talking about getting whipsawed, and I've heard so much of that. But I don't know how to put it, but the buy zone basically works because you can't put a 12-inch ruler in a 6-inch box. It's going to stick out on one side or the other. And so in this particular case, you can see here, it's stuck out of here because the range, the average range of a lot of these pairs is a lot larger than 20 pips. And that's what you're trying to exploit. And so if you see price, oscillating back and forth, let's take a look at the pound. And so you can see here, if you got in the trade, or let's just take a look at each one, and we're looking at M30. Chances are you're probably trading a lower time frame, maybe you're even looking at M1. This might take a minute to populate. But the point is that, if you're looking at price as it hits the line, if you take the trade, you might be able to nab a few pips. Okay, and so yeah, but here you never ever ever got a sell signal. So let's just say you went in here and you didn't take your pips, and then it went all the way back here. You might be down 10 or 12 pips. Well, a couple of things could happen. One, you could just stay in the trade because your risk management allowed you to stay in the trade. Second thing that could happen, finally updated. Now I'm going to have to turn off the auto scroll for now. You may have exited out with a loss because of your risk management. And so those are, you could either exit with the profit, write it out, or exit with the loss. But you can see here, what happens in this? You see all this waffling. Like maybe here you bought, but then it went back, and then it gave you another chance to get in. And that's trading. It's going to go up and down. It's not just going to sit there and go move in a straight line. It doesn't do that. And so, but chances are it's not going to stay within the buy zone. It's just not going to do it. And then finally here, you got a nice breakout, 10 pips or more. But then again, it came right back in, and then it broke out again, came back in, and then broke out and just kept going. Thing is, you don't know what it's going to do. So that's why you have to, one, take profit when you can, be happy. You might get another opportunity. And just so happens it was in the launch pad. And, once again, based on observation, if it goes up into the 40s, it usually keeps going up into the 40s. So, we started out here and then it just kept going. So I think this was on the 30. Might take a while to refresh these. Spread that back out. Turn on auto scroll. And there we go. And so one of the things I've told traders over time is like, if you're getting whipsawed, if you're getting you keep taking these signals and they go against you, move up a time frame or two. So I put this on the M30. If you trade with the M30 candle color at those lines, a lot of times you can make profit. Now, of course, there might be some movement in here where you get in, it pulls back, but so long as it doesn't, change candle color on you, you should be okay. And even here, if you were to take that trade, it went up, then it went down, never crossed the daily open. So, I mean, you can look at it this way. If it's above the daily open, say, okay, that's an indication to be long. If it's above the short zone or sell zone, it's like it hasn't broken through it, so that means I can wait. If it crosses or hits it, it's like, you know what? It's telling me I should get out because there's a chance it could keep going. Of course, there's a chance it could bounce. But the thing is, we don't know. That's why we take stops. So when trades go against us, they only go against us so far. So, I mean, you could put anywhere from a 10 pip stop to a 20 pip stop based on your risk. Because once again, what's risk? It's a function of stop loss and position size. So, how much are you risking? If you're trading one lot, that's $10 a pip. If you only want to risk $100, well, that's only 10 pips. But if you're trading 5 mini lots, that's only $5 a pip. So now you can have 20 pip stop. Maybe you only trade a 1 mini lot, and that gives you 100 pip stop. Maybe you trade two 1 mini lots, that gives you a 50 pip stop. But the reason you trade two is so you can average in. So maybe if it comes down here and you see it going in, you can buy low, bring your average entry price down, and then that way, if it comes here and hesitates, you can at least exit that trade, break even, or with 1 or 2 pip profit. So, I mean, that's what you have to look at when you're looking at the buy zone. So, trader, I hope I've explained that well enough for you. Let me know if you still have any questions. And I do have other buy zone videos. I don't know if you've seen them or not. So, we got the rat zone. So, it looks like red rats might be ready to feast here. Range is large enough. Bambino flex short at the pivot. Looks like that would have paid off. Pivot trading plan. Oh, actually, Bambino flex said to go short. That from the open, that wouldn't have paid off. Pivot trading plan short near the pivot. But Bambino flex indicator here is saying that we have a good chance of hitting S1, I believe. Or no, I think we should be hitting yesterday's low because S1's below yesterday's low, if I remember correctly. Okay, but we did take out today's pivot. We've taken out the week, and we've taken out the monthly pivot. In and out of that lower wick zone. See, once again, there's the buy zone. Not the buy zone, but the launch pad, the 3340, 40, anything that 40 area on the pound. It just seems to launch from 40 to 60 or 50. You can usually make those trades. Sometimes I just threaten to just put a run an EA to do that, but I don't like doing that. So for the week, we've got 142 pips of range, 25 percentile. And it looks like we're going to have an inside bar on the week. And so we'll have a new weekly inside bar. We did not break out of either the previous high or the previous low, hence inside bar. Okay, weekly rats, 48 on the red rats, 94 for the green rats, close minus low. Weekly crossover traders, high minus open was 138, open minus low only 4. So basically, this was saying, hey, the week wanted to go up. Okay, we're looking at some simple price action here. Had a nice push down on that 1 minute, but that looks like a return bar to me, so price should probably try and get back to that open level. Have to wait and see if that happens or not. Higher, low, lower, high. There was a nice trigger there. Good for some pips, as you can see. A lot of times playing it the second time around, that's what a lot of those market profile traders do. And this is just kind of it's just something that I saw. So I don't know if it's an adaptation or a derivation, but that's just something that I see you can do for a profit. But we're just about out of time, traders. So I hope you've had a profitable week. I hope you have a fun and safe weekend. As always, when you trade, remember, never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.